Yeah, welcome to the session 9 of the behavioral finance. We will be understanding the concept called the mental accounting. So, mental accounting is the term which was framed by Richard Thaler in 1999. It described the term, the mental accounting, the process whereby the people code, categorize, and evaluate the economic outcomes. So, let me give an example, then we'll understand what the power of the mental accounting. So, as per the theory of economics, you are having 1000 rupees and you want to take decision what to buy what not to buy. So then on the basis of the marginal theory of utility and the marginal theory of equilibrium, that then you will then you can distribute your money in the different items to buy, and you will be maintaining all the economic theorem you will be followed. But as per the mental accounting theory, so it tells that it's not the decision of spending money all depend on the source of income. So the source of income, if you have earned the 50,000 rupees out of your 8 hour of works in the office for entire month, and sometime you have worked even beyond office hour to earn this 50,000, and at the same time in just 1 hour of gambling you could able to earn 50,000 rupees. So then it's all about the 50,000 you earn out of gambling. So it is a kind of effortless income. So 50,000 you earn out of gambling, you will be considering that as an effortless income, and you will be spending with all recklessness. So you may feel go for the party, you will buy some precious or valuable mobile, or you may go for some sort of outing. But the money you have earned from the entire month with lot of your hard work and your mental, psychological, physical works, that you will be very, very cautious and rational while spending the money for that. So money earned from the different source determine how you are going to spend for the future, even in the stock market. Suppose you have earned 20 lakhs from the stock market in last financial year, and you have earned same 20 lakh out of your hard work of entire year. So then from this 20 lakh profit from the stock market, you are likely to reinvest 10 lakhs for future stock investment. But out of this 20 lakh what you have earned from your hard work and from your regular income, you may be willing to just invest 2 lakhs from that income. It's then income, money is money, it is 20 lakhs. Then how the decision, and the stock market is having the same condition, same position for this 20 lakh, whether it is being earned from the stock market, whether it is from the hard income. But the present stock market is indifferent to your earning, but the decision how you are going to spend your money all depend on from which source you have earned it. So let us see some of the concepts. The money is fungible, but people put it in separate mental accounts. Money is fungible means, so all the liquid asset, whether you are having cash or your gold, or you are having some of the securities, that you can convert one to the other form. Money is fungible, but people put it in the. Let me give an example as given by the Dan Ariely. So the example is all about, suppose there are different departments in a company, and the different budgets are being allocated to the different companies, and in some of the company, some of like in spite of they are throughout the activity and all, they do have a ample of this money that is remain unspent at the end of the financial year, but they have made a good amount of profit, or they have and for the activity costing they have done a good amount of profit in their department. Now the money is allocated to the different departments, and some of the money are remain unspent, or some of the department they earn good amount of money. Now you just check different department at the end of the year, they are not going to transfer their surplus money to the other department. Rather, they will likely to check their one activity costing, how much as a cost center, how much money they spend, how much gain they get out of it, and accordingly they will make their different department will plan their own party. Similarly, in our account, we in the mind we used to plan for the different activity. Suppose I need to buy a house, I need to spend some money for the outing, I need to spend some money for my children education, I need to spend some money for buying some of the books. So there are different buckets or different where we have put our money, and on the basis of that we want to take decision on in the future. So we look into that in the last movie ticket example that will check found money problem and the vacation fund and the credit card that will go through in future. So money is fungible means that one form of money can be converted, easily replaceable by another identical item, mutually interchangeable. But actually, money is not fungible in the mental budget or the mental buckets or the different category that we put our money in terms of our plan. Let us give an example. Mental accounting, we have bonus, good amount of bonus I got because of my uh, good contributions, and as an incentive, I also get a good amount of extraordinary income, and I do have a regular income. So now what will happen? The most of the time it is being found the gift or the buying of the precious item or going for any vacation all depend on how much extraordinary income or how much bonus I used to get. I'll never likely to go for some expensive mobile from my regular income. I'll be very, very cautious. But all of a sudden, if I've got a around 25-30,000 in the bonus amount in my account, I'll feel I'll do something. I'll buy precious shirts. I'll buy precious gifts. I'll also buy some of the good books. But regular income, I'll take care. I will ensure I'll spend it. So on the basis of the different bucket of income, I am planning different expenses. So for the food, for the education, for utilities, for clothes, and accordingly, if something remain unspent, I'll be looking into to spend it in future in that same item. I may purchase some expensive food item in future if the food budget remain unspent. Similarly for the rent and all, if I found some discount, suppose during the lockdown I have kept 15,000 for the rent, but the owner did not take. He took just 50% of the rent. Then that 7,000 I'll be assuming as if my free money that I will be spending for some sort of party or some sort of my relaxation. But the different budget, different utility, and different kind of budget that we create on the basis of the source of income. That is the crux of the mental accounting. So you can see this lady is working throughout the month for the in the bank, but in the mental account, she has kept a different money for the different kind of expenditure for the banking purpose, for the tourism, for future saving, for house, for installment, and for different items. So accordingly, so dividing of your money in the different heads, and accordingly you are planning and you are giving weightages. So let us give an example of ticket buying that will give us an understanding of mental accounting better. So there's a way, but in rational finance, people never takes into account of different source of income, but rather they say income is income, whether it is this 2 lakh is whether from gambling or whether from your hard work, whether from your bonus or whether from any inheritance, it doesn't matter. 2 lakh is 2 lakhs. So the debit, credit, all these, but the psychology, the emotion attached to this, all this spending and expenditure. So let me give an example. Suppose you are going to a movie and you purchase a ticket and you went to the counter and you purchase a hard this ticket and you want to so the go to the went to the counter and you want to check in, but the moment you try to check your tickets, you did not find your ticket. You have lost your ticket somewhere, and like it is being asked that if you want to buy second ticket, some of them tell, okay, I'll buy. But at the end, the ticket you have spent, the amount is 500 rupees to buy that ticket, but you have lost that ticket and you want to buy second ticket. Now you are spending another 500 rupees to buy that ticket. What is the cost of one ticket now? If I'll ask, then people will say it cost 1000 rupees. But at the same time, I was carrying money, but when I go to the ticket counter to buy the ticket, I found there is a loss of 500 rupees. I lost somewhere the 500 rupees. Now, but I am buying, I have to buy, I have to go to the movie to watch the movie. So I paid 500 rupees to buy the tickets and I entered into. Now, how much money I spent to buy that ticket? I'll tell I've spent 500 rupees. But I've lost to watch the movie. In the process, I lost 500 rupees cash, but additionally, I buy 500 rupees. I'll never tell I have spent 1000 rupees. Here, I'll say I've spent 500 rupees. I've lost 500 rupees cash, but I've spent 500 rupees for ticket buying. But in the first case, I'll say for I have purchased a ticket of 500 rupees worth, but it is lost. I'm now buying another ticket by paying 500 rupees. Now my ticket cost is not 500, it is 1000. So this is the way people used to evaluate the different expenditure they do for the different purpose, even the activity is the same. So mental accounting, now you are paying for the expensive hotel 500 rupees, $500 through the debit card. You feel sophisticated. It's a great experience. But if you'll be paying $200 for the mediocre restaurant, you'll feel "Hmm, it is a expensive. It's a kind of difficult because if you go to the five-star hotel for the water, the same mineral water for the same kind of your the drinks. And this beverages, chips, the amount you pay, you feel sophisticated, the same amount, but the different, it's not the product utility, it is the transaction utility you derive from that. And here the transaction you, because you get a kind of social appreciation, okay, he has visited to five-star hotel, or he has, so that kind of psychological benefit he is attaching to his expenditure. So it's not about just money, but there are the different utility, the product utility in terms of this mineral water or the beverages or the snacks. At the same time, the transaction utility is getting by getting his like people appreciate, like people start talking about him more, he's visiting often to the five-star hotel, so that is become his. Now you are spending the money to go the, so buying for to the go to the restaurant, hotels, or to buying something. If you are paying in form of hard cash, the money is valued more. But if you are paying the money through the plastic, money through digital or through online mode, you may not feel that pain. While paying through the cash for buying the book of 500 rupees worth, you feel the pinch of paying. But when you pay through the cards or debit cards or credit cards, you feel it's okay. You don't feel the cost, the pain. So let me give another example, then we'll understand. So the what the mental accounting is all about. Suppose you have spent you have spent you are with the family and you are going to watch a movie, and you have already spent a good amount of money to hire a taxi, and you have paid around 2000 rupees. You purchased a good amount of snacks, and now you entered a movie theater by purchasing movie for the five members, almost 2500 rupees you spent. Altogether you have already spent 5000 rupees and you entered into the movie theater. Now, after 15 minutes of watching this movie, you feel this movie is a bogus. It is a simply wastage of the good amount of time. It's a just drainage of your emotion. So you feel it better to take your whole family to somewhere out, to the parks or some theater, some sort of or these games or some Disney World, instead of wasting your time in the movie theater because you understood the movie is not good. Now that is a restriction that you have already spent 5000 rupees to enter into movie. Now after 15 minutes you are realizing movie is not good. What should you do? You have already spent, should you watch the movie and you spend next 3 hours, or you will like to leave the theater and to go for some sort of other. So you understood. So from the movie hall, you need to take a decision whether you want to be in the hall or you are going to lose your 5,000 rupees. What should be the best decision for your family members? So let us do some of the assignment. What are the different form of mental accounting bias learned in this session? State it, connecting with your experiences in 500 words. Write down the learning from the session in your own words and go through some of the videos in the YouTube and check anything extra you are getting out of the video given by the Dan Ariely about the mental accounting. So next, go to the questions. So the questions, what do you mean by the mental accounting bias? Connect the mental accounting bias with the source of income. Connect the mental accounting bias with the mode of payment and present it. Thank you, viewer. So thanks for watching. So hope you understood and enjoyed this